Hey everyone, Mark here. Thanks for joining me for another live stream of our Greenbridge Investing Market Analysis. Today's Friday. So we're going to review some ideas and things to get some clues for the early part of next week. So again, if you're new to Greenbridge Investing, make sure you check out our website at greenbridgeinvesting.com. Also, make sure you register for this channel or subscribe to this channel so that every time I do one of these, you get an email notification. Plus, if you like the video, please give me a like, and that'll make me feel happy to do more of these videos. Anyway, so in today's session, I'm going to focus first on the Bitcoin buy signal because we've gotten a lot of questions about it, and I'm using a particular technique to get into this thing which may not be very clear to a lot of people. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. By the way, if you have a symbol or a market you'd like to see, please share it in the channel now so that when I'm done with my part of the analysis, I can go over symbols and markets that you're interested in. Valiant, thank you for sharing your questionnaire, BTC, Ethereum, and XRP, no problem. So let me get through my stuff and we'll get into your charts. Okay, again, if you have a stock or another market you'd like to see, please share it in the channel now. So let's begin here with Bitcoin because that's the title of today's video and the analysis session. Now, here's the thing. So let's talk about the buy signal first, okay? And by the way, if you have questions as I'm going through this, please feel free to ask. The buy signal was generated here. I'm opening up the charts so that you can see what I'm talking about. The buy signal was here, back here, which was a couple of days ago, right? There's an inside bar, it was bullish, higher low, and then yesterday we took out the high of that inside bar at basically that 625 level. Now, that's a buy signal, but if you've been reading my analysis on TradingView, and if you've been seeing the stuff that I've been putting in the chat room, I keep bringing up this resistance zone, okay? This 11.6 to 12.3 resistance zone. This zone, as you know, has been significant for some time. If we go back, you can see it dates back to over a year. And it goes even further if I actually pull the chart back further. So not only that, but we do have some price reactions recently in this area, as you can see. Bearish outside bar, another bearish outside bar. So, okay, fine. The thing is, and this is where the conflict comes in. It's not selling off. We keep getting higher lows into this resistance. Typically, when you see this type of consolidation or this type of triangle, it's often a continuation pattern, as many triangles are, and the trend is clearly bullish, right? So theoretically, this thing should break higher. Now, why didn't I take that buy signal though? And what's the deal with this limit order that I used? By the way, when I sent out that text yesterday to our members, for some reason, it didn't recognize the entry price that I put in, so it sent out a text without the entry order. It just said stop loss, and then it had the rest of the information. That was a mistake. So I resent that text, so you should have gotten the entry price. Now, that entry price that I'm talking about is 11,500, okay? Bitcoin was fooling around the 11.7s when I sent that out. So why 11.5? And as you can see, today's low was 11.652, right? So it didn't touch the limit order. But the reason why I'm using a limit order is because, first of all, we're in a consolidation. And if this thing fails to break out, you're going to see all those buyers that are jumping in now, they're going to sell it, right? They're all going to get pushed out of their position, or they're going to react mistakenly, and they're going to start banging it out, right? And I'd rather, if I'm going to take a risk at such a low probability location, I'd rather get a better price for it. That's the reason. Now, if I'm wrong and this thing breaks out higher and it never fills my order, I don't care. You know why? I take no risk and I don't lose anything. Now, some people that are full of greed and all that stuff, they're going to say, yeah, but you don't win either. But I'd rather not lose because, you know, I can miss moves all day long and still have my money for the next move. What people don't realize is when you react to these type of things and you keep getting caught in these mistakes and you keep getting stopped out, your capital shrinks And now you have less to invest into that next opportunity when it appears. I'd rather miss the move if I don't like the location. Okay? I follow rules. And my rules say that this is a low probability location, although the trend is bullish. So there's conflict. Now, this thing is very likely to produce a failed high, which means it takes out the high, gets everyone long around 12,000, and then you see it pull back again, right? So again, my point is, if I'm going to take a chance at such a not so favorable level, I want a better price. I want better reward risk. I want my price. I'm not going to chase this thing, especially at these levels. Location is very important for these type of trades. Now, if you're a day trader and you want to jump in and see if you can, if that momentum continues, great. Nothing wrong with that. And if it doesn't follow through, you're quick enough to get out and minimize that loss. That is the game of a day trader. We're not talking about day trades. We're talking about swing trades. The risk is going to be much wider. So I put that stop around, in the 10,950 area to give it some room. I really would rather get out sooner than that if it doesn't work, but that's at least a reasonable location based on the structure. Now, those of you that have been following my analysis, those of you that know the ideal inflection point, I've been writing about this and putting it on TradingView at least for a couple of weeks now, is that 10,500 area, right? This old resistance, new support. That's what I'm looking for. That's the ideal location. That's where the reward risk is the greatest, and the probability, which people, again, probability is not something you can see on a chart, okay? So the probability is much more favorable that we get a bullish reversal at such a location, and if we do, there's a lot of room for follow through. Even if it doesn't push to a new high, there's still some room, there's still some potential that can put us in a much better situation. I'd rather wait for that than try to catch this tough move up here. Okay, so again, I could be wrong, and people don't like missing out, but again, just keep in mind, this game is more psychological than anything else. People that are desperate, people that are fear of missing out, people that don't have discipline, they're going to jump in at anything because they believe that all buy signals are equal, but they're not. There's probability that's associated with them, and I don't like the probability of this area, and I tend to be very conservative. So again, this is for swing trades. If you don't know the difference between a swing trade and a day trade, then you really need to learn that. Okay, anyway, so that's Bitcoin. That's the buy signal situation, and why I used a limit order at 11.5, which has not filled, and it's still active. So maybe in the next couple of days, maybe it will fill, maybe it won't, but that's up to the market. Okay, and we'll see how that goes. But I just wanted to explain my rationale and my reasoning for using a limit order rather than using a buy stop like we typically do when it breaks a high of a candle. Okay, so again, let me know if you have any questions. If you would like to see a stock or something else, put it in the channel. So that's Bitcoin. All right, now I'm going to move on to the next thing here. I want to talk about the dollar Canadian. All right, and then I'm going to take a look at the Nasdaq and the S&P. So this dollar Canadian has been a real pain. I sent this trade out early in the week, and I was a little aggressive with the entry because I didn't wait for this time frame to produce it. I used a smaller time frame, but I was very compelled, or I should say, I was very interested in the trade idea because the location was just so, the location was very attractive, okay? And we got that pullback and everything else, and I saw the buy signal appear, which on this time frame, you can't see it because I used an 8-hour chart, but it was actually this tail over here, and there was an attempt, but then you see it had not followed through, okay? So it almost reached our stop, which was at 131.85. This thing went to 92. So it missed our stop by just a few pips. And now we're getting this bullish candle. This is what I want to see at this location. So still long, just have to let this thing play out now. Basically, we're betting on the dollar bouncing. This is great because today's Friday. This thing is really not going to move anymore today. And we have a failed low situation on the US dollar. not only do we have this recent failed low situation, but we have a broad fail low relative to this move back here. That really points to a lot of potential in this thing. That's why I think it's within reason to see the 134s or 135s going into the middle of next week. I think that's very reasonable. Okay, and that's the game that we're playing there. So you can see that's the trade I sent out, and that's what we're waiting for. These things require patience. Okay, can't react to these things, just following rules. Same strategy for Bitcoin. All right, guys, thanks for putting those symbols in the channel. I'm going to get to those. Now, let's take a look at the Nasdaq, NSX-USD, which is the CFD. I put this chart in the chat room earlier. I've also been sharing some versions of this chart on my Twitter feed. And so here's the thing. We had this bullish week, right? This was what, Wednesday? Followed by yesterday, got a little tired. And now today we have this little inside bar situation, this doji situation, and it's bearish. Now, I put in a chat room earlier, I don't like this location, okay? I've been saying that this market has been vulnerable since we pushed this high and we gave it back real quick, okay? And it developed a higher low around this level here, which is what, 10,850 area, developed a higher low, and so far has not taken out that high. The fact that it's getting tired here is just, it just adds to our bearish argument. Now keep in mind, we're not looking for a bear market. It's important to understand this. Novice traders tend to think in absolutes, where they think, oh, if it's not bull, it must be bear. Well, no, the market is still bullish, okay? All we're looking for is a retracement to a more reasonable inflection point that offers a better probability, right? And right now, that point is around the 10.3 area. Okay, I wouldn't go by this higher low over here around the 10.8 because that's too tight, that's too close, and we're likely to take that out, okay? But as this thing starts to retrace and starts to get everyone really bearish, and then you're going to have people calling for a bear market and all this other nonsense, that's the place to be looking for buying opportunities, especially in the good stocks. We've had a bunch of stocks get stopped out recently, you know, stocks like, what was that one, Reefer, Research Frontiers, ADVM stopped out. We had a few of them stop out, and that's while the market's going higher. That is generally not a good sign. Okay, so when this market gives us a much better location, I'd be interested in, first of all, much higher quality stocks. I mean, those stocks, you know, they're low quality, but if there's signals in them, we give them a try. When I talk about high quality stocks, I'm talking about stocks that, you know, are generally healthier, stocks like Roku, stocks like, you know, some of these other ones, Iova, some of these ones that recently showed some great gains, but they're more stable. So that's the Nasdaq, okay? And that's why I've been emphasizing I'd rather stay away from new buy signals in stocks. We've had a couple of stocks produce some interesting buy signals around some interesting locations, but if this market pulls back and we get that broader pullback, even to the test of this 10.8 area, you're going to see a lot of stocks get hammered because they're acting relatively weak, and that's not a good sign. So one I want to point out, let's take a look at the SPY, which is the S&P 500 ETF. And again, so there's been conflict with this thing and the Nasdaq. Often they move together, okay? And as you see in the bigger picture, they have. But the Nasdaq moved much further ahead relative to the S&P. Relative to the S&P, the Nasdaq is like way up here somewhere, okay? While the S&P is still struggling with this March peak. So I don't know why, you know, people may not notice that. And we're not selling off dramatically, not yet anyway. We're just getting a little hesitant. And as you can see, today's candle got weak there, right? It's a little weakness. We have, look at yesterday's candle, which was this bearish looking pin bar, right? And now today we're fooling around the low of that. 335 is the low, and today's low is what, 335.91. Yesterday's low is 335.83. We're fooling around those lows. Now, with this type of price action, and especially this pin bar that we see today, I would anticipate that early next week or even Sunday night, we should see some red. Okay, I mean that's what this is telling me. I don't have opinions. I don't get stuck on that idea. Just that's what the chart is telling me to anticipate. You know, I don't how much red, I don't know, but this is looking bearish, and I would if a market's going to act bearish or we're going to get selling activity, it usually unfolds quickly. So this is saying basically Monday is likely to be a red day. We'll see, but at least knowing that, I should be prepared by getting out of stocks that haven't been performing well, or taking profits maybe on some of the ones, locking in some more profit just in case. Nothing wrong with that. And then we'll see what takes place from there. But that's the warning. I certainly would not be taking new buy signals today with this type of price action. Okay. So I just want to run by that. Now, one more I want to run by. Is I want to take a look at let's take a look at gold. Okay, XAUUSD. Because this is another situation where we get a lot of questions about situations like this, especially on the initial pullback. By the way, this type of move that you see on gold off this peak, there have been a lot of altcoins, there have been a lot of stocks that have shown very similar type of vertical moves, right? And these vertical moves are nothing but the herd mentality in motion. And this is why we always say, do not buy the high. Do not buy when they go vertical. If you're a day trader, okay, you can play that game because you can get out quick. If you're not a day trader and you buy this high thinking, oh, it's going to run another 5 or 10 points or whatever, this is what you're opening up your possibility to. This is the risk you're taking, that you get hammered like this. Now, gold especially is tricky because fundamentally, gold should be, going to 3,000, right? Like everyone's saying, oh, gold this, gold that, because the U.S. government's printing money all over the place. Okay, fine. But as you can see, markets are irrational. And for whatever reason, it gave back 200 points in just a couple of days. So that's tough to be long from the top and have to sit through that. Now, the question we usually get, though, is when the buying begins to come in, people say, oh, is this the time to get into gold? Because they missed out and now that first bounce? No, this is not the time. Because this bearish momentum is still in play. This is a very tough spot to get long. Again, if you're a day trader, no problem. But swing trade, very risky, this first bounce. I want to see an attempt to take out this low, all right, which is what, 1862? I want to see an attempt. If it cannot take out that low, then I will be interested. Then I will say, okay, we can now evaluate risk effectively. We can take a risk that makes sense, and we could measure some potential rewards. That's what I want to see. That's the structure that I want to see that tells me that there's some stability in the market rather than a continuation of this bearish momentum. All right, so those are the ones I really wanted to go over real quick. I don't think there were any other ones. So let's get into your stocks. Let's get into some of these questions here. Okay, and again, I thank you for your questions. Again, if you're new to the Greenbridge Investing channel, make sure you register for or subscribe to this channel here. Make sure you like my video if you like it to encourage me to do more of these videos. And check out our website at greenbridgeinvesting.com. We do have swing trade signals by text and by email. Now, swing trade signals are not the same as day trade signals. We come out with them, maybe a busy week is like 3 trades, 3 or 4 trades. It's a very busy week, depending on the market, and we're covering multiple markets. So just keep that in mind. We also have portfolio management ideas, and we have a chat room. So let's get into your questions here. Valian. So we took a look at Bitcoin. By the way, I know Michael in the chat room, he's usually very active, but I know he's in the Eurozone, so it's crazy hours for him. He asked about Bitcoin a bit in euros. So actually, before I get to these questions here, I want to answer that one because Michael's very, he's very active and he asks a lot of great questions, and I want to make sure I address his question here because I know he'll watch this like after the fact. So here's Bitcoin and euro, and some of you may be able to get something out of this as well because I know many of you are in the Eurozone or in other parts of the world. So his question was, how does that trade signal that I sent out, how is that relative to Bitcoin against the euro? Because he can't trade Bitcoin against the US dollar. Well, if you look at the chart, right, the chart is the same situation. All you have to do is look at this range here. I'm going to draw a box around the range. Okay, basically you look at this range from this low to this high, basically, right? You look at the middle of that range, and that's basically what I'm doing with the US dollar version, and it happens to be around 11,500. So in terms of euros, you can do that same kind of thing and look at this price, which is 97.50, and you can sort of translate it that way, okay? Something like that, because the structure is still the same. So just like that stop at 10,950, I mean, that's somewhere around these lows. I mean, that's going to translate to, what is this, like maybe 93.50 or something like that? So in euros, okay? So I just wanted to point that out. Just basically use the same prices that I use, right? Just in the euro version, just take the areas of the chart and just see what that price is in euros. And it's the same thing. It's the same chart. Okay, so I just wanted to point that out to answer Michael's question. And thank you for asking it. All right, so let's get into these other things here. So Ethereum. So now I went over Bitcoin, Valiant. Pretty much I covered the Bitcoin situation. So I think that should give you some perspective there. Let's talk about Ethereum. All right, so that's ETHUSD. And now Ethereum, this thing is doing its own thing. Okay, as you can see, like Bitcoin stopped at this resistance, basically, you know, when you compare them together. This thing is on its way to a higher high here. So this is tough. I mean, this is the kind of breakout that Andrew was looking for on Bitcoin, but we're getting it in Ethereum. And it's why I say this is tough is because for the longest time, Ethereum was basically lagging Bitcoin or just following, copying it. Now Ethereum is starting to do its own thing. And that's interesting. So we can't do anything with this now. Just like I said with gold, buying into a high like this is just asking for trouble, right? What if we had bought this high back here, this pin bar back here? When you buy a high like that, and you know, sometimes it works out and it's like a random reward, but automatically it puts you into a weak psychological position. And I've explained this before. So if we buy this high, we buy this right now, and this thing turns into a pin bar tonight, okay, we will then be in a psychological weak position. We're going to be nervous about it. We're going to hope that it doesn't sell off much, and if it sells off, we're going to get stuck in that most likely, or bang it out at the worst price. I'd rather be in a confident position, and that's not here. So what do we do in this situation? All we can do is look at inflection points and see, or basically wait for the market to deliver one. Now, the first one, just talking about historical price action, is right there. And that's the 404 area. So basically the whole number, the 400 whole number area, is going to be the inflection point. So if we can get a pullback, but right now we're at 441. So that's a decent little pullback. That's not even a big pullback. That's like a decent one. You know, other ones are going to be like here. Yeah, I'll show you the next one. It's going to be like here, okay? And that's 330. Now, it's hard to believe that Ethereum will pull back to there, but it can do it. As we've seen, this thing, you know, this thing can pull back. All you need is some kind of sell-off in Bitcoin, most likely, and that can start the selling. Now, I know there's a lot of fundamental hype and all this other stuff going on with Ethereum, and I understand. You can't get caught up in that. The charts will tell you when the real opportunity exists. You have to ask yourself, if you're not in this now, you have to ask yourself, why weren't you in it back here? I mean, you know, you're buying this now. Where were you back here? Now, we're not in it. You know, we didn't take any trades in this thing. And that's I say to myself, why wasn't I in it back here? And now I'm interested in buying it. And on the flip side of that, if you're long Ethereum, and as this thing pushes highs, this isn't a bad place. Whenever I see vertical moves, it's never a bad place to lock something in. Now, some people may say, oh, but if I locked it in back here, you know, at 350, whatever, and locked some in, I would have missed all that profit. Right, but only after the fact. You can't look at it that way. That's greed speaking, okay? The idea is to reduce risk. And if you have a great price and you don't take out the whole position, you don't exit the whole thing, you take a small profit. Maybe you lock in 10% of your position. something like that as it goes higher, and you're still in and you participate. Maybe when it hesitates like this, maybe you lock in another 10 or 15%. Now it breaks out higher. Great. Maybe you only have 50% of your position left, but it's better than nothing. That's the way you have to look at this. People, especially novice investors and traders, they tend to, like I said, think in absolutes. So they think that they're going to buy this big position at the absolute bottom, and they think they're going to sell their position at the absolute top. That's very unrealistic and leads to a lot of reactionary and emotional trading. So that's Ethereum. Nothing to do there, but let that thing find a support, and it will. It will pull back like everything else, just like gold. It will pull back. Okay, so let's take a look at XRP, which is Ripple, and this one has been a pain. Now look, so we got a higher low in place. Take a look at that, right? Higher low off of this support area right here. Now this is one of those situations. What is the support? The low there is 27 cents, around 27 cents, and we are now at 30 cents. Okay, so this thing looks like it's on its way somewhere. The higher low, these typically, higher low like this, often leads to a higher high. A higher high in this situation can be, what is this high here? 32 cents. So you're looking at like 33 cents, 34 cents, something like that. You have this old resistance. See that red line is an old resistance that dates back to March, probably further back than that too. But that's right now. If you buy this thing right now, and you have to basically hope that the momentum continues, because you're not getting the best price, number one. Number two, you're buying into the middle of this range, which, you have the structures in your favor, so it may work out. But what you're looking at, that potential, right? Maybe 33 cents, so you're looking at maybe 3 cents profit, something like that was within reason, while you have to risk, what are those lows again? Like 3 cents. So it's about 1 to 1 here. If you're into that, that's up to you. We don't like these altcoins. That's why we don't really talk about Ripple much. We're going to start, analyzing these more once we get our old site running again. We used to have a site that just focused just on these things, and we're going to get back into that now that they're active again. And we can talk about these for people that want to be more active with these. But to anticipate another move from like this low, 20 cents to this high, which is, like a 12-cent move like that, to anticipate something like that from here is unrealistic, okay? I mean, can it happen? Yeah, but you're better off being more conservative, especially with these altcoins that are typically, we look back further, look at the range, right? Look at this range. Earlier in the year, this thing was fooling around 33 or 34 cents, and it, the March low, this stupid thing tested 10 cents, or whatever that is. What is that low? 13 cents, whatever, right? And it's hard to believe that it can do something like that after being so vertical. So keep that in mind. That's the risk that you're looking at times. This is why it's usually better to wait for inflection points than buying into something because it looks strong. If it looks strong, meaning, it looks like, here, I'm going to show you something that looks strong. This looks strong, right? When I put that out there, that looks strong. When you buy something that looks strong, you've missed, the party's over. You don't want to buy things that look like that because this is what you're facing, typically, not all the time. So, and here we are again in the same situation, right? Looks strong. So not the best price. You have to really be on top of that risk. All right, so that's XRP. Like I said, we'll get more into these altcoins for people that want to follow these, especially ones that are popping like Link. I'm sure you all saw Link, and Tezos. So that's that one. All right, so thanks for asking those questions. Well, speaking of Link, I want to point something out, okay, real quick. Talking about the herd mentality. Because Link is one of those situations where, and I put this analysis out earlier in the week as well, I talked about that 18 level being a significant projection level, a resistance projection, and look, we turned. So buying into something like that, that's why we always say don't buy the highs. You don't know if it's going to stop at 18 and turn like this, or if it's going to go through, but if it stops and turns, now you're facing all this potential pain. to another inflection point. And the first one is around, what, this 14.5 area? Why take all that pain when you don't have to? So I just wanted to point that out. And, you know, we'll see. We'd like to buy Link, but it's got to give us a much better price. Not going to buy the high. All right, so let's get into some stocks here. DJ, you asked for PGC. Oh, and I know Pal, you asked for EB. Let me do EB first, because I know you put that in the chat room earlier. Pal asked a question, and DJ, then I'll get to yours. So Pal asked a question about this Eventbrite here. And his question was, at what point do you decide, at what point can we argue that the trend has changed relative to this bearish structure back here? Because obviously this bearish structure is still in play. We can argue that, right? Because look, I mean, it made a lower high over here, but it has not made a lower low. So that's the first sign that something is, that's the first sign that this momentum is really no longer in play. That's the first sign. It should have made a lower low, okay? And it has not. So that's the first change. Now, the other thing is it took out this resistance. This first lower high was taken out. That's another positive sign. So at what point do we decide that the trend has changed? Well, at this point, when that high is taken out, you can argue that this thing is likely, it's either in a range or the bearish trend is still intact, right? But it's more likely to be in a range at that point when this high is taken out. And now that's what it's giving us, a range, because pulled back, found a higher low, but it hasn't made that higher high yet. The fact that you do have a higher low, again, is a bullish, that's a bullish sign. Now in theory, this thing should work its way to a new high, in theory. If it does not, and instead takes out this higher low, then most likely you're still in the range. And the next test would be the range low, and see, does it hold the range low, or does it break below the range low? If it holds the range low, it's worth taking a risk on, because if anything, it can revisit the middle of the range, okay? So that's really, a lot of times, you don't go from bullish to bearish, you go from bullish to range bound to bearish, or bearish range bound to bullish. And so that's what we're in right now. We're in that range. And in order for this thing to be bullish or to be more likely to go higher, it's got to take out this high decisively. Meaning, all right, what is that, 1266? So it needs to close above that, needs to give you another higher low. And then I'd be much more confident as far as the trend change. Okay? Now, that would be the more recent structure. Now, look what you're dealing with, though. You are dealing with something that's been weak for some time, right, for a whole year. So the best confirmation of the change would be the break of that March high, right, that 2278 area. You clear that, then it's pretty clear that the broader trend is bullish at that point. But you have a ways to go before that thing proves itself. So it doesn't mean that you can't participate in opportunities as it's building that base. But to really be much more confident with the bullish side of it, you need to take out a key resistance. And right now, that's it. Okay, so that's how I would work with something like that. So good question there. So let's see. Now, DJ, PCG. Let's see, PCG. So this is PG and E. Let's take a look here. I think you've asked about this one before. So we have, again, we're coming off of bearish structure. I see a high there, right? I see a high over here. Those are lower highs. We're not making lower lows. So this thing is range bound. Now, when we open this thing up further and see what's going on here, we do have, I don't like this lower high in play. Although we're consolidating, I would be suspect of this, okay? So in order to work with something like this, if you're looking for longs anyway, what I'd want to see is a test of the range low, which would be here. I'd want to see that, okay? And see how it behaves off of something like that. Also, I want to see, does it get back to this low over here, which is around the $4 area? Can it do that? Or will it give you a failed low off of the $7 area? those are the much more attractive inflection points. I know we're really nowhere near those points right now, but that's what I'd wait for. I mean, a more short term, a tighter level would be this one here, which is 835. If anything, I'd look for a failed low there or a double bottom there, as a starting point. But the real inflection points are going to be those lower levels. And just be patient. A lot of times it'll test those levels, especially if we get that broad market sell-off, which we've been we've been getting a lot of signs for such an outcome. The market hasn't produced it yet, but you get something like that where the Nasdaq has a really significant pullback, or the S&P. This thing has been acting relatively weak, because think about this, right? Since March, the stock market has been going straight up pretty much, right? So everything got hammered in March. Okay, this thing got hammered too. Since March, there's been that recovery, and this thing just stopped. What's going on here? Why is it not testing these highs while everything else is? So that's a sign of relative weakness, and we've been seeing this in a lot of stocks. That's why a lot of our stocks got stopped out. They're acting relatively weak, and again, that's not a good sign. So I'd rather be patient with something like this. It's not like you have a nice clean-cut bullish trend here. I'd wait for a range low. Okay, so that's the answer there. Thank you for bringing that one up. All right, ACB. Oh yeah, so this one's been a pain. I have some ACB waiting for this stupid thing to do its job, and it's been very difficult. Now, you could see the old order that we put this in way back. This was before the reverse stock split, okay, when it was like below $1. And then a couple of days after that, right, you see that squeeze. So here's the thing with ACB. These cannabis stocks, I think at some point they're gonna get back into the spotlight again. Obviously, it's not making new lows, which is a good sign. It's just not in play. So your question, I'm long from this buy signal off the double bottom. Okay, you just have to be patient with it. A good sign for this would be to start to take out some of these highs. Like, it'd be nice if this thing closed above 15, 16 area. It'd be nice if it could do something like that. What's in your favor is the higher low. Okay, you have a higher low here, and it's trying. You have this little double bottom situation, right? It's this little mini double bottom. I call it mini because relatively speaking, it's very hard to see. Around, what is this? Basically, it's around the $10 level, slightly below the $10 level. This is a good sign. So you want to see some of these highs start getting taken out, close above those highs. Like I said, these stocks have been a real pain, and they would just require a ton of patience. With something like this, pal, I don't know how much of it you have, but it's like basically one of the best ways to deal with this is if it breaks these supports here, it's probably a good idea to lighten up or just hold it for zero. Okay, and if it never goes to zero, I know that's pretty bad advice, but with these stocks, they're so difficult, they're such a pain. It's like you shouldn't have big bets in them anyway, and the only way to play them is to play them with absolutely no fear. So you can't get any lower than zero, right? And if you have a small position, all right, no big deal. That's basically how you have to deal with something like this. You don't want to deal with that. You don't want to have that mentality for all stocks, but for something like this, it's a highly speculative stock, just like the altcoins. You have to be prepared for that event. And if you never get it, great. At some point, this thing will start to pop. It'll get back into the spotlight. And next thing you know, this thing will be pushing 20, and that's when you should be getting out of it, okay, or locking in profits or whatever. So just be patient with it. At least the structure right now is favorable, okay? And I'm sure CGC, let's take a look at CGC. I know we've had some questions about the CGC call that Andrew called. I mean, look, CGC, which is the leader of this space, has been consolidating. It's not taking out these lows. It's holding above them, but it's also not really going anywhere. So this thing needs to start taking out these highs. And I think the sector will start moving again. Again, this is a hype sector. And once it starts to get to the spotlight, you're going to see the action. Usually it starts with some news. Okay, pal, let's take a look at VUZI. All right. I'm not familiar with this one. So let's see. Let's take a look. What do we got here? Lower high situation. This thing's retracing. First inflection point. I'm looking at, I see this right here. That's the first inflection point based on this historical price action. Now, this one I see had the recovery with the stock market, and now it's just acting weak, right? So this right now, and I can see probably why this is on your radar. We got this failed low situation right here, right? Basically, this, I mean, it's somewhat lower. This isn't the greatest example of a failed low, but you also have the pin bar, which I can see why that would get your attention. The thing is, this location could be better, especially in light of the stock market situation. These stocks, and like I said, there are many stocks that are like this, where they're in decent locations and they're starting to show some buy signals. But right now, I do not trust what's going on with the stock market. If that Nasdaq pulls back significantly, or the S&P, which they have a lot of room to do such a thing, you know, you're more likely to get these better prices, which, you know, in this case would be this $3 area. So I would wait for something like that, okay? You are dealing with a broader bullish structure, at least since March. So I think your probability would be better there. You need that stock market to pull back. But this is an interesting one. Thanks for bringing this up. I mean, you're also dealing with this lower high. So another nice thing to see in a stock like this would be a double bottom would be nice. Kind of like that situation with ACB. A double bottom would be nice because then it would cancel out, or at least take credibility away from this lower high. As you see, the lower high developed and it produced a lower low. I mean, not dramatically lower, but it's the lower low. This is not a bearish trend. This is just bearish momentum, because the broader trend, as you guys can see, at least since March, that's not bearish, right? So all you're doing is correcting that. Just need to wait for a better support level, or at least better structure, okay? Because there's really not much structure there. So thanks for bringing that one up, though. That's interesting. We should keep that one on our radar. So DJ, I think your next video should explain the buy stop, buy limit. Oh, stop order entry. DJ, sure. I mean, that's a good suggestion. Actually, I was going to do, if you mean my webinar, my next webinar, I'm going to actually talk about placing options orders. We're going to do like a hands-on webinar where I show people how to place an order for calls, puts, you know, short calls, short puts, that kind of stuff. And we can see exactly what you have to look for and all that kind of stuff. I mean, it's relatively, it's really not very complicated, but that's what I was going to do. Now, if you're talking about one of these videos, if you want me to go over stop orders, I mean, I can do that. I mean, I'm sorry, market or different types of order entry methods. I can do that. You know, that I can do that. That's cool. I thank you for that suggestion. Pow, who is my forex broker? I use MyFX Choice. That's who we use. We have some kind of affiliate thing with them, but we actually use them. We've been using them now for it's been over a year. And the reason why I like MyFX Choice is because they allow you to use things like Litecoin to trade. And so we're actually trading our altcoins, and we're able to trade CFDs, we're able to trade currencies, you know, forex, using altcoins. So it puts our altcoins to work in more productive ways than just watching Litecoin do nothing all day. So if you want more information about that, I would say check out. I don't have the link for MyFX Choice, but anyway, just, you know what? I'll put it in the chat room. I'll put it in our chat room, in the free chat room where you hang out. I'll put more information about it in there if you want to check them out, or you could just Google them. But yeah, MyFX Choice. Okay, so thanks for asking that. PCG. Okay, fundamentals on FinViz look very bad. I was Andrew to look into fundamentals. Okay, no problem. So that's now PCG. All right. Yeah, so we looked at that chart. Yeah, so DJ, as you know, we don't really go by, I don't go by fundamentals. I'm only looking for short-term momentum. So even if the fundamentals are bad, it's okay. You know, but a lot of these stocks, especially a lot of these stocks that I've found buy signals in recently, their fundamentals haven't been that great. And that's going to come back to bite you when the whole market turns, right? And that's what we saw. That's what we're starting to see, like with you know, Reefer and some of these other ones that got stopped out. So let's take a look here. Hamid, can you look at FIZZ? Sure. FIZZ. Let's get that in here. Just give me a second. FIZZ. By the way, if you're new to the Greenbridge Investing YouTube channel, make sure you subscribe to the channel and make sure you like the video if you like it. All right, now, what is this here? National Beverage Corp, okay? Now, obviously, it's been recovering nicely with the market. You have some nice bullish structure here. Let's point that out. Let's highlight that. You got this. Now, recently it pulled back a bit. Okay, nice little corrective move. And it's trying to do something here. Now, here's the thing. So you have generally bullish structure. You have the retrace attempt. But you have a little problem here. And that is you have a failed high. See this right here? You have this high back here, which is 64.85. And then you have today, which is now a bearish pin bar. And this thing is going to close in 15 minutes. Not a good place for a long. Okay, that's a lower high relative to this high up here. So that's a lower high, and you're getting a bearish pin bar. So if I was long, I would not want to see this. This is a lower high, which is likely to retest the low, especially since you only have this little three-leg structure in here. This isn't really a good sign. So I would be looking for a test of this 60 area, especially in light of the position of the Nasdaq. Also, this resistance is also relative back here. You have some resistance back here, which it seems to be reacting that same area. And this is sort of a head and shoulders formation. So I would definitely hold off on any new positions. If you're long from one of these lower prices, not a bad place to at least reduce risk. Maybe lock in some partial, and maybe I'm wrong, but I don't like the formation. I definitely don't like this. It's not a good sign. All right, just like I pointed things out like in Workhorse and some of those other ones, they were starting to show not so good structures, okay, for longs anyway. So that's what I would do with that. You know, sometimes people say, should I get out of the whole position? That's up to you. You have to use your discretion. You know, but if anything, it definitely calls to reduce risk. Maybe you tighten your stop. I mean, I don't know. You have to decide that part. Again, I don't know if you're in from it. I don't know if you're in this stock or where you're in from, but that's the sign that I see right there. Okay. So good question. Thank you for bringing that one up. Now, RDHL. Let's see that one. RDHL. Okay. So this is one of those biopharma. One of those. Okay. Let's take a look. So, right off the bat, I see a inflection point right here. All right, so what is that? What price is that? That is around $7.50. And this market tried to rally. Again, great example of why you don't chase. Okay? So it works until it doesn't work, right? You chase it and the market will give you a random reward until it gives you one of these. You bought the top and now you get this, right? And this happens a lot. That's why you can't be distracted. Not you, Hamid, but people cannot be distracted by these vertical moves because this is what you are facing. Now, this thing is looking ugly. There's no recovery candle. This is closing on its low. With this type of vertical momentum, I would not do anything with this as far as a long, not yet. Now, would I be interested in something like this as a long in general? Well, let's see. Looking back, I mean, you do have this nice higher low development, this whole structure here, which took a few months to develop. Tried to break out, failed. By the way, this type, see this failure? This is the regular behavior of a failed breakout, or what we like to call a failed high. This is usually what takes place. It taps it and sells off fast, okay? Lures in all these breakout traders, and then they all bang it out at the same time. So you're going back into the range. So in this situation, if you're interested in the long, I mean, this stock doesn't really look that impressive going back, this price action. But if you're interested in a long, I would at least wait for a test of that level here, the high sixes, low sevens. I mean, where is this thing right now? It's in the high sevens right now. So low sevens, high sixes, followed by some sort of bullish reversal candle. A pin bar would be nice. Would be even better would be reversal structure, you know. And what I mean by that, like I pointed out in some of the other stocks here, something like this situation here. See how it kind of popped up, retested that low and failed to go lower? That's really what you want to see. You may not get that. The market may not deliver something like that. If it does, that's ideal. If it does not, at least wait for some buying activity before stepping into something like this, because this thing has some room to go into back into this range, and there's nothing that says that this momentum wants to stop at the moment. Okay, so that's how I would handle that one right now. Thank you for bringing it up. That's interesting. And I like the price too. It's one of those inexpensive stocks. Keep in mind, day traders are going to be all over. If you're dealing with a stock that's $12 or less, or even in the $20 range, they're usually full of day traders. Okay, especially day traders with small accounts. So just and they can create a lot of unnecessary noise. So just something to keep in mind. Now, Hamid, I have LLPR. Is that LLPR, or I think maybe that's IIPR from 80. Take profits at 3 points. Do you think I should sell all of it? Okay, so let's take a look. I think that's IIPR. I'm gonna guess it's IIPR. Let's see. Okay, that makes sense. $120. So you're in from 80. Wow, that's great. I mean, look at this breakout. Look at these highs. So your question is, should you sell all of it off at this price? Well, here's the thing. I don't know how much of it you have, but the thing is, you're at a high. If anything, it doesn't hurt to maybe lock in a little bit more. Maybe you lock in 30 or 40% of what you have. But here's the thing, Hamid. There's no sell signal just yet. You have a bearish pin bar which developed yesterday, but we didn't take out that low at 117.80 area. Did not take out that low. So when you have a winner, a lot of times it's best to let it run. And this thing still looks like it's trying to run. So you have to decide that maybe one thing you could do is trail your stop. Okay, and one place to trail your stop could be the low of this pin bar, which is, you know, that 117.80 area. Perhaps you put a stop for maybe half the position. Thing is, this thing is very strong. So, you know, if this thing has a dramatic pullback, if the stock market really pulls back, you're looking at this thing revisiting, what is this level here? The 100 area, which makes sense. That's a whole number inflection point area. So obviously you want to reduce your risk dramatically and not get caught in a scenario like that. But at this point, yeah, let it run at least. Lock in some, like I said, never hurts to lock in some. And I think a trailing stop would be effective here by trailing it 2 bars behind. Okay, which means, you know, you'd be at that 117.80 area. Don't put it exactly there if you're going to do it. Put it slightly lower and then see how the market behaves. This thing may have a few more points in it. You know, why not? Let it run. I mean, it's all profit anyway. So and always remember, you're never going to sell the top. Okay, you're never gonna get out of your entire position at the top. And it's great that you've locked in profits 3 times along the way. I mean, great trade. That's a great trade. So thank you for sharing that. And that's how I would manage that if I were in such a position. Great trade. Wow. Where did you hear about this one? Was this one something you picked up like on news or something, or maybe a newsletter? How did we not get into that one? So anyway, thanks for pointing that out. Pow, yeah, I'm long off the mini. Oh, okay, sure. Oh, okay. Mike, hey Mike, ANZ on ASX, please. Hey, no problem, Mike. So let's take a look. ANZ in the Australian Stock Exchange. So let me go here to stocks, and this must be, you said on the ASX? Yes, this is it right here. So let's see what the story is this one. Australia and New Zealand Banking Group. Okay. You know, we have a short in the New Zealand dollar, by the way. New Zealand against the dollar, we're short. There was a trade of the week that we mentioned on our podcast. I think it's still working. I know it activated. I think it's still favorable. I don't know. I have to check. But all right, so let's see. What's the story with this one? Now, you do have, right off the bat, I see a range. Let's look at some of the levels. First thing, let's look at the levels. So you have an old resistance back here. All right, and you have it's become a new support, and price has reacted off that support. So this is a bullish sign, definitely a bullish sign. You have this higher high, which took out this lower high here, all bullish, like that example that we were looking at from Powell earlier. Very, you have a change here for sure. Now, you're also taking out these recent little mini highs, okay? These little lower highs here, you took those out. Good sign. So you have a higher low. I would anticipate that this thing is going to at least run for a higher high. It's at least within reason based on this structure. So let's see. You have this resistance here. And you have, of course, this is the obvious one to see, which kind of dates back to this gap. But you have this here. So those are your points that you're coming up to, which is basically, what, 19.5, or you can even round that to 20. And then you have 21, right? So at this point, I don't know if you're in this thing, but I mean, I wouldn't buy this thing right now because you do have some room to play with. Now, I would imagine, I don't know how a lot of these Australian stocks will react to the US stock market in general. I would guess that they would be positively correlated, meaning if the US stock market pulls back, these things will probably pull back too. But again, you know, this thing obviously hasn't been following the US stock market very well, right? All this time, the stock market, the US stock market has been pushing highs, and this thing has not been. So maybe it's not correlated. Maybe this stock is kind of doing its own thing. I don't know. But just based on this chart, if you ask me to pick a level to take risk, I'd prefer to take risk around this range low area, which is around 17.98, basically 18. You know, can it test that? It's possible. Now, you do have an inside bar today, so just buying it here, it's a tough spot. And the reason why I say it's tough, I'm going to tell you why. Because you see this line that I put there? That's basically right in the middle of this consolidation. And that's a tough spot because it can go either way from there. You're going to have a lot of volume in there, a lot of longs, a lot of shorts, and it can be noisy. I mean, you notice it went right into that area, and now it's hesitating a bit, right? So it's a tough place to put on a new position. I'd prefer at least a little bit of a pullback or something if it delivers that to take a better risk. Or if you get into something like this now, you're going to have to use this range low, this extreme low here, 1693. That's where you're going to have to define your risk from. So you have to decide if it's worthwhile to take that kind of risk in the hope of, or in the anticipation of, testing these highs. So obviously the first high is not going to be worth your risk, but perhaps the second high. All right, so you have to decide that part. But the overall structure, hey, at least it's improving. All right, that's not bearish, and it looks like it's coming out of that recent bearish. If we go back and look back further, like this here, I mean, obviously going into March there, this thing has been pretty bearish, right? And before that, it wasn't really, it was doing a lot of nothing. So the overall inflection point, if this thing could get back even anywhere near those March highs, you're looking at this level here, which is like $24. So it's got some potential over the longer term if it can hold up. All right, so not a bad structure. That's the conclusion there. So thanks for bringing that one up. Very interesting. Let's see what else we got here. So Ricky just joined in. If you haven't covered, could you please look at BHF? Also my DAX short trade. Okay, let's take a look. So BHF. By the way, the stock market is closing right now. And so now that's it, right? So let's take a look here. BHF. Another financial one. So right away, I see range. Let's point out some levels. Let's take a look at some levels. I see this level right here. We have this old inflection point, which is acting as a new support. Okay. We have this old resistance that dates back to, what is this? January there, something like that. And looks like you're stuck kind of inside of a range, right? Now, in that range, within that range, you do have a higher low. This is a higher low structure. As far as taking any new trades, I don't like the current location because, again, you're right in the middle. You're right in the middle of between this high and this low. So ideal situation would be you get a test of the low of the range. Even this smaller, this shorter range here, the more opportune price would be the low of the range. Now, I say this, and sometimes these things will not test, they will not go back to that low of the range. And in that case, you know what? It's a risk that you don't take. Now, you can try buying the middle, but again, these are a pain. Now, you have to measure your risk from that range low. As far as today's structure and today's price action, this isn't bad, but what takes the credibility away from it is that location, okay? Now, if you buy something like this here, or you buy this thing on Monday, you're looking at, I mean, if you want to be tight with it, you can look at this yesterday's low, $31, or you can even round that to $30 as a minor support here. You could basically use this level here, something like that, 29, what is that, 28, or 29, 30, around there. You can even use that as a tight support for a tight stop and see if you get the higher high. That's a much more aggressive trade. Something like, you can look at that as well. But the ideal situation would be this lower range, low area of around $26, $25, something like that. Otherwise, like I said, you can look for that breakout, but you're basically hoping for the best. It's like a 50-50 thing there, which, I'm not crazy about those types of trades, but they're appropriate for some people, and sometimes they work out. As long as you're quick, if the thing doesn't go the right way, you're quick to get out and minimize that loss. Otherwise, you have a lot of risk in there to, relatively speaking, when facing that range low. All right. Now, they're financial, so I guess this thing is going to follow the market somewhat, although it hasn't been. I'm just trying to look for things that you can use to help gauge the strength, So anyway, but that's how I would handle that one. And DAX. So let's take a look at DAX. Now, I know Andrew called a DAX trade recently, so let's take a look at the what is it? I'm sorry, it's EUR. This is the CFD of the DAX. I don't know if that's the same trade that he called. I know this is one trade that this was a trade that we called a while back. This is probably not the same trade that Andrew called. But now, so you're saying here that the DAX never triggered. Should you keep the order in? Well, I'll tell you what. You have these indices like the DAX, the Nasdaq, and all. First of all, this thing has been relatively weak compared to the S&P. Right now, let's compare this to where the S&P is. The S&P is up here, relatively speaking, right? The March peak. The DAX hasn't even made it there, which means it's relatively weaker. And we know that this thing is correlated to the S&P. So if the S&P sells off, this thing is in a great location to sell off. I mean, what a great short candidate. These are the things that we like to short, okay? Not Bitcoin. So you have an inside bar off of a double top type of situation, and it took out the low of that inside bar, which is yesterday's bar, which is that 12.9 area. And today we closed at 12.864. So I don't know if where your stop order is to enter this thing, Ricky. If it's 12.5, I mean, you can actually get in earlier, in my opinion. You can use the low of, what is this, 12.7 is today's low? Basically 12.8. So 12.750-ish, maybe 12.785, something like that, takes out today's low. Maybe you have some room to play with there if you're going to use the CFD. I like this idea short. You got a lot of potential in this thing. I mean, the next support level on this, even on this range, is 12.2, 12.2.5. So there's some room to play with. If that support is taken out, you're looking at a much lower level. You're looking at like 12 even. Even these targets, notice these targets we have here. So that's definitely a good candidate. If this thing doesn't work out, it goes the wrong way, basically you don't want to hold it above this high, which is this 13,100 high. I mean, that's really, that's really where the stop should be, somewhere above that. And if it turns again, then, we just jump back in and short it again. Nothing wrong with taking that small loss and getting back in, if that's what we have to do. But I would adjust, to answer your question, I would adjust the entry order to, somewhere around today's low to see if it takes that out. on Sunday night or Monday. So great question about the DAX. Thanks for bringing that one up. Great candidate for it short. Okay, POW. SPG has some news behind it and looks like it's trying to form a higher low with an outside bar going to the close. All right, so let's take a look. SPG. Let's see. SPG. Okay. So range bound, right? Range bound, I see the higher low you're talking about. We have this support right here. We also have this resistance here, which is now still a resistance. Okay, it should have been a support. It didn't act as a support. Now it's acting as a resistance again. You have this rounding bottom situation, which is not bad. It's a higher low. You took out these highs back here, which takes away from this bearish momentum. So it's a little bit of a conflict. Now, so your question is, has some news behind it. It looks like it's trying to form a higher low. All right. So is this a long candidate? Is basically is the question. Is this thing a long candidate? You do have, today's candle is an outside bar. It's not bad. I mean, what's the price of this thing? Fooling around. All right, 68. What's today's close? 68.20 basically. So around the low 68s. You need to clear this resistance, but it's not a bad idea for an aggressive, I'll call it an aggressive swing trade. Your stop on something like this is going to have to be around the $65 low, slightly lower, which is the low of today's candle, somewhere below that. So you have to decide if the reward potential is there. Now, can this thing test into these 90s? Well, the question you have to ask is, what has this thing been doing since the stock market has been making highs? Why is this thing here? So what if the stock market pulls back? Okay, it has that broader pullback. How will this thing behave? If this thing is not really following the stock market, then it's doing its own thing, then okay, fine. But I would tend to be more conservative on something like this, and I would not be optimistic about, you know, a $90 high. What is that? Yeah, low 90s. I would not factor that in. But what is realistic? Well, I'd say halfway there is like, so the mid 70s, that's within reason. Okay, it can do that and then fool around. That's at least possible. All right, the middle of the range there. So not a bad candidate, you know, for early next week. I'll keep an eye on this. This may be a good one for trade of the week. Maybe I'll call this trade of the week. I do like the higher low situation. I do like the broader higher low. And thank you for calling this one out. Very interesting. It's just we have to use a tight stop. I wouldn't want to use this range low stop, especially for something at this price range. Cool. So Simon Property Group. Okay, cool. Thanks. Where did you hear of this one, Pal? Pal, you come up with some interesting stocks. Where'd you get that one? I'm just curious. All right, so let's see what else. I think I got almost everyone's questions here. Hamid Ayab here is a cannabis. Oh, that's why I thought it was familiar. Andrew mentioned that one. I think they do like the they sell you the space to grow the stuff, right? They basically, you can put your lab in their building or whatever and all that, and they take care of that, something like that. I remember he talked about that one a while back. I thought it was familiar. BHF is Greenbridge trade. Oh, great, Ricky. You know, I should know that, but Andrew handles a lot of those stock trades, and you know, so sometimes I don't see them. So cool. All right, nice. So I think I got everyone's questions. Wow, I've been talking for a while. You guys make me talk for a long time. How long have I been talking for? Over an hour? Wow, over an hour. You guys are nuts. But no, I appreciate it. Cool. And thanks for all the likes. Again, if you like this video, please give me a like. Let me know. So you know, encourages me to do more. And do I have everyone's questions answered? Any other questions about anything? Any stocks, any markets? This is great participation. I appreciate it, you guys. You know, it's just I like to answer your questions, and I want to make sure I got everyone leaving here with some sort of perspective and some sort of clarity. And DJ, that's a good idea that you bring up about order types. I think that may be a good topic for me to start out with in this type of video. Instead of doing a whole webinar on it, I think I could that might be an appropriate topic for something maybe 10-15 minutes long where I can talk about order types. That's not a bad idea. So again, thank you for bringing that up. All right, everyone. So if I have everyone's questions answered, I will let you go to enjoy the rest of your day. Enjoy your next couple of days here. When I have my next webinar prepared, which will most likely not be this Sunday, but the following Sunday, I will send out an email invite to everyone so you can join me for my webinar, and we can go over some stuff. That's going to be the options one. All right. So thank you again, everyone, for listening. Thank you again for all your great questions, and enjoy the rest of your day. I will speak to you next week. Have a great one. Talk to you then.